Joining me for Mining Pitch is Stuart Ross, President and CEO of El Tigre Silver Corp. That's ELS in the Toronto Venture Exchange and EGRTF on the OTCQX. Stuart, thanks for joining me today.
Thanks for having me. I appreciate it.
Well, the past few years have been a very challenging time for the mining space. For investors looking for value in this rather beat-down sector, where deals are quite plentiful, why El Tigre Silver Corp?
Well, El Tigre Silver is, we are doing business in Sonora, Mexico, which is, in our opinion, a very good environment. We own 9 mining concessions, 21,000 hectares, 215 square kilometers, northeastern Sonora State, about 100 kilometers south of the border at Agua Prieta, Douglas. Our business really has 2 components. The first is to build a processing facility to recover silver and gold from a tailings stockpile that's very large, and to use the funds from that to develop the in situ resource that we have on the property. We recently completed and filed a new and revised 43-101 technical report. The technical report includes. It was filed August 15th on CDAR, and it's available on our website. It includes, there's 2 sides to it. There's a resource calculated on the in situ hard rock, which consists of an indicated and inferred total of 41 million equivalent silver ounces. That was determined by a significant amount of drilling. There's been a total of 17,000 meters of drilling on the property. That we have. We've determined from that we have a vein system that's approximately 5.3 kilometers in length. 1.5 kilometers of it was in fact mined from 1903 to 1938. They produced about 75 million ounces of silver and 325 to 350,000 ounces of gold. The latest part of our drill program was focused on a 1.2 kilometer section of it in the southern end of that property. That's where the 41 million equivalent silver ounces of indicated and inferred came from. That is on a 5.3 kilometer strike length, so there's a lot more exploration to be done there. And our intention is to go to production in 2014. And with the revenue from that production, continue to drill the property and expand the size of that resource. We completed the technical report, which, as I say, included the indicated and inferred resource calculated on the in situ material. We also, in that technical report, have produced a pre-feasibility study on the tailings. A significant amount of work was done on the tailings, both from a drill perspective, an analysis of assays, and also all the metallurgy. Along with the metallurgy, as you know, pre-feasibility includes costing from CapEx, sustaining capital, sustaining G&A, and the actual CapEx to build it. So that's all been completed. The economics are quite strong on that. We have proven and probable 1.4 million tons of material. The contained silver in that is 3.4 million ounces of silver and 11.6 thousand ounces of gold. The base case on this in the pre-feas was done at $25, and the cash required was around 4.5 million. Net present value at an 8% cap is 10.8 million, which is right now is actually higher than our total market cap. Internal rate of return on it was 53%, payback of 1.5 years, and a payback multiple of 5. Cash costs, operating costs are $11.30 an ounce, and total all in is $14.44 per ounce. So we're well positioned to be able to take this forward. Even at $20 silver, even at $18 silver, we're still economic. The economics were done with 15% contingencies on all the line items, the cash requirements have built into them sustaining capital for G&A and sustaining capital for mine operating. So all in all, a pretty strong advantage that we have over most exploration companies, in that we can get to production early in this process and use the funds to expand our resource.
What can investors look forward to as far as news flow, Stuart, in the coming year?
Well, we'll start construction in the early part of the year, so there'll be progress reports on that. We have, because we have had an existing mine on the property, we have access to underground. And although we may not do any drilling this year, we're going to open up some of the underground accesses that we have. We've got a significant amount of sampling done in there, and we're going to do some more. The underground sampling is very close to it's like drilling because you're underground. We're at 200, 250 feet, 300 and 400 foot levels. So we can go into those levels from surface all the way to the vein system and continue to bring assays out. So we'll have a news flow on the assay results of those samples.
For investors looking to get involved here, what is the share structure and your treasury position?
We have the cash on hand at the moment, or working capital on hand at the moment is around $600,000. We have enough to get us through the spring, through the start of construction. Our intention would be to do another equity financing, a small one. We've been well supported by a group of private investors in Canada here, so I don't expect that'll be an issue. The structure at this point, we have 53.6 million shares outstanding. We have 4.6 million options, 20 million warrants between 38 and 55 cents. 10 million of those expire December 15th, and they're at 55 cents. The fully diluted, if everything got exercised, would be 78 million. Likelihood is that 10 million at 55 cents will fall away on December 15th, and our fully diluted position will be 68.5 million.
Stuart Ross, President and CEO of El Tigre Silver, thank you so much.
You're welcome. Thanks for having me.